Time now for Options Corner. Joining us now to take a deeper look at this chart is Duke of Data himself, Rick Ducat, lead market technician. So bullish note on initiating coverage here. Talk to us about the trends that you notice in this chart for IBM. It just looks like a steady climb, or pretty steady. I mean, there's some bumps in the road, but pretty steady climb here from your chart perspective.
Yes, Diane, I don't think anyone gets to just climb with no bumps at all here. But IBM seems to have weathered this AI breakdown storm better than many other names in this tech sector here. You can see outperforming the tech sector, XLK, ETF, and the S&P 500 by a large degree here. So we can see now, if we were to look at some of the other companies that IBM kind of competes with in this kind of cloud software space, once again, it's held up better than many other of these big names: Microsoft, Oracle, Amazon, HPE. So some interesting strength here. One reason I think IBM is more interesting is as the software aspect, as you touched on, but it's more focused on quantum computers, which is more of a harder, more kind of cut and dry field than this AI generative field here. Quantum computing is just very extreme, difficult calculation. So it's an interesting, different look at everything here in this accelerated computing race. If we were to look more at IBM's candle chart here, we can see that we had a big push to the upside on earnings here that took us through some notable resistance areas. 295 here was old highs. It was once again where we had a high point here in terms of our closing price. We did make intraday pushes beyond that level, but you could also say that this level 288 was significant. It was a frequent low point and then a high point for price. It became a ceiling that we struggled to break above before our earnings breakdown here. So from there, we can see that we had topped out around here in terms of closing prices, around 315, almost like a double top type of pattern here. 324.90 is where things hit our high there. Once again, though, we stopped at around 288, that same level just recently here. So now if we were to look at some of our other studies here, we have our moving averages, 21-day, 63-day exponential moving averages coming in near 298 and 286 respectively there. So RSI trending lower as well. Look for a breakout above our trend line and a push above that 50 midline here for signs of a further bullish move. Finally, our volume profile study shows a very large accumulation of trading volume here near that 283 level or so. So that could be standing out as a supportive area. To the upside, volume picks up again around the 300 mark.
Now you've got the example trade perspective. So you gave some levels. As you mentioned, IBM has held up where others may not have. It's up more than 30% year to date. What's your approach for an example trade for this one, Rick?
Right. So we have a confluence of support here near 280, 285 or so. We have our old highs and lows. We have our linear regression line. We have our moving average. We have our heavy volume. So perhaps a neutral to bearish or bullish example trade, -1 December 19th, 285, 280 put vertical at a 170 credit. So a short put vertical, a neutral to bullish trade here. 170 credit, 330 max loss, roughly 1 to 2 in terms of risk versus reward. 28 days out. You could see that our break even 283.30 is about 3% to the downside or so. Expected move about 7.5%. So a bit more of an aggressive trade here, but still a softer target, just looking to stay above that break even point, thinking that that heavy confluence of support will hold on despite this overall tech unwind that we've seen.
Thank you, Rick. That is our lead and market technician, Rick Ducat. Appreciate it.